Days. Welcome everybody
The
to
Monday before Thanksgiving?
the Monday before Thanksgiving.
Yeah.
Did you bring your turkey hat?
I did not. I was thinking about that when I was driving in. I was like, man, we need to get better at props.
Oh, I thought you were saying you're thinking you should have brought your turkey hat.
No, why no? Which would be a prop, right?
Yeah,
You know,
I told you that a while ago. We need to just have a bunch of props. It should be prop heavy on the show. But
I got some good feedback on when we had the masks.
the mask was good.
Like,
I mean,
you guys did something different, kind of switching it up. I was like, man, I didn't think people were going to like that much.
Yeah. So, we should have brought me a turkey. We could have had the turkey on the call, but the video.
Carving
But
that thing
you're just kind of.
But then, hey, we wouldn't be able to, to be able to bestow some of our education on our viewers here.
Absolutely.
So what are we talking about today, man?
You were going to tell me how thankful you are for me.
I'm very thankful for a lot of things, buddy. You included, my friend, all right?
No, we are, so Money Mondays, right?
Yep.
We do this every Monday at what time, Ben?
3:30 Central.
Oh, you remember now. It took us about 25 shows to go. No, I'm kidding.
It was tough.
Mondays, 3:30 Central,
on my
right?
calendar
We
now.
go through a bunch of different topics.
Yeah.
This week's topic is how to define your real estate investing goals, right? We figured it's a good match for Thanksgiving, kind of the holidays, right? Really
Yeah.
getting back in that goal-setting mindset. Hopefully next year kind of COVID passes and we kind of get back into a little bit more of a, where you can actually set goals and plans and then work towards them without a big wedge getting tossed in it.
In our defense, we did have some pretty ambitious goals, too, for 2020. Some of them we were able to achieve. Some of them are obviously going to be now 2021 goals.
Absolutely.
Mainly on the acquisition side. But no, you brought up a good point. This is the time, everybody, that you need to be setting your goals, right? Whether it's personally, professionally, whatever it might be, right? Now we can't sit here and motivate you to get into the gym or eat better or whatever it might be, whatever vice you need to get rid of. But we're going to try to at least show you kind of some of the ways that we kind of look at, how do we look at it from a real estate investing, goal standpoint, right? So we're going to dive right in here because we're a couple minutes late, right?
But before you get going, right? So we'll spend about, so the show itself 30 minutes, right? For those tuning in for the first time, 3:30 Central every Monday. Now we'll just spend about 15, 20 minutes presenting and about 10 minutes live Q&A. So
and the Q&A is the best part.
Q&A is the best part. And you guys don't have to ask questions about what we're talking about. You can ask questions about whatever you want to know. So we're happy to answer them. Feel free to ask them, but hopefully it's about the topic. But if not, feel free to ask.
Yeah, I mean, anything real estate, entrepreneur-wise, technology, right? What do we think of the market? Those are some of the questions that we've gotten in the past, and we're happy to throw those. So throw all the curveballs to him, all the easy questions to me, and we'll go ahead and dive right
and
into
before
this.
you get going, we got two comments, right? So Savion says, what's going on, guys? How's it going, man?
buddy.
You're definitely one of our top
Thank
viewers, so appreciate it.
Yeah.
Any deals in the pipeline? We've been close on many deals. My heart is still broken. It's been a rough, quarter.
Yeah.
It's just the problem with this business is being close as if you didn't do anything at all.
Yeah, and you got to be patient, right? We're not willing to buy a deal just to buy a deal. So, we're trying to be as conservative in our underwriting, knowing that obviously COVID's still with us, and we're hopeful that it goes away sometime soon, but who knows, right? So you got to be a little bit more conservative on those rent pushes, and obviously debt's cheap, which is great. But that doesn't always offset the premiums that some of these brokers are asking and the lack of rent pushes that you can get on some of these deals. So
Absolutely.
So let's talk about it, right? I think we always look at everything in terms of a SMART goal, right? Tony Robbins talks about this. It's been out in the market. If anybody's in corporate America, you probably had your SMART goal, either defined for you or your manager's probably asking you for one, right? But what are we talking about in terms of SMART goal, right? It's specific, it's measurable, it's attainable, it's relevant, it's time bound, right? So we're going to kind of go through all of these.
Can you say that in reverse?
No, I can't.
Off the top of your head without looking at the screen?
Oh, shit. Oh, excuse me. Time bound, relevant. Don't laugh, Shanna. I heard you back there. Attainable, measurable, and I should know the S. I can't believe that.
Specific.
So, really? All right, well, I was close. Thanks for throwing that. That's the
problem.
curveball I'm talking about with this guy. You got to watch him. All right, so what are we talking about when we're talking about being specific, right? You have to just say, you can't just say, I want to buy real estate. Okay, what does that mean, right? There's 1,000 different niches in real estate, so I think you have to be a little bit more specific, right? Yeah. I want to buy a 100-unit to a 200-unit property, multifamily, in Houston, Class C or B.
Perfect.
That's pretty specific, right? Yeah. Versus saying, oh, I want to buy real estate. Or I want to get in the real estate.
There's a lot of people want to get into real estate, and it's very vague. And, that's fine. People start there, but again, be a little bit more specific because otherwise you're just going to get lost, right? And I see that a lot of times. People just get overwhelmed. Yeah. Real estate is massive. It is a very big ecosystem, right? Narrow what you wanted. Whenever I first started, I wanted to buy 1 to 4 unit properties in Houston that I could basically self-manage, right?
That's pretty specific.
You know, and something, and honestly too, even pricing, I had to, you know, in that $150,000 to $220,000 price range.
Yep.
Now, yeah, maybe I'd go a little bit lower, maybe a little bit higher, but that was kind of the focus, right? And from that, you figure out what opportunities present itself, but you can really start to build up a system to really double down.
So you got your box, right? Yeah. I mean, we've talked about this on this show before, right? We talked about this, and we talk about this in Investor Academy quite a bit, right? You have to define what your box is, and that's either if you just want to come at this business passively, I just want to put some money to work. Or if you want to come at this, you know, as you know, the sponsor of the deal, the syndicator, whatever you want to call us, right? You need to understand what you are going to be doing and what you're going to be going after. So that's what we're talking about when we're talking about being specific, right? So next one, measurable, right? You're the data guy, you're the KPI guy,
yeah,
right? You do all the systems for us and
you need to be able to measure it. You need to be able to track it and kind of what it is, right? It's important. Again, saying, you know, I just want to buy real estate. Again, it's not specific, nor is it really measurable. Yep. It's I want to buy 3 properties by the end of this year that are in this price range that are yielding this return. Right?
And I'd take it one step further, right? Because what we've noticed as we've done this more and more, the more deals that you look at, the more deals that you underwrite, the more deals that you make, you know, an offer on, the more likelihood that you're going to. So you can literally back up and say, okay, and this is just an example, folks. So don't take this is with a grain of salt, right? I have to look at 100 deals to underwrite 50, to offer on 20, to get 1, right? And you really
so your measurable is I'm going to underwrite 20 deals a month.
Yep.
In order to buy 3 properties this year, right? Like you're measuring that and tracking. Then each month you can evaluate yourself. Did I underwrite 20 deals? No, I didn't. I underwrote 10.
So
great.
What does that mean?
I'm not on track, right? You need a course correct.
Yeah, you need to say, okay, maybe I'm not talking to enough brokers, excuse me, right? And so you need to pick up the phone. And when we tell you, I'm going to go a little bit on a tangent here. Don't just call them, ask a bunch of questions, and then hang up and never call them again. Try to develop relationships with these folks, people. You know, they're not only going to put you onto more deal flow, they're going to put you onto the right deal flow. So it's important to really develop those friendships and those true business relationships with the brokers, right? They're not some people that you should put on a pedestal. They're just salespeople. Yeah. You know, they're all good guys and gals.
Absolutely. So before we continue on, right, Monday Mondays, we do this every Monday through 30 Central. A bunch of different topics from underwriting to acquisitions to dispositions to everything in between. This week, we're talking about how to define your real estate investing goals.
Yep.
Right, and really, you know, we'll kind of go on for about another 10 minutes, and then at the end, we'll do open Q&A. So if people have comments, questions, you know, feel free to leave them. We're happy to talk to them live here.
And go ahead and dump them right now, folks, right? Yeah. Like, you don't have to wait until the end.
First come, first serve.
Ferris is obviously on his computer. He's monitoring this stuff. You know, Shannon can help out as well. So go ahead and dump your questions in. We'll get around to them.
I'm actually just hanging out, chatting with people.
I figured you weren't doing it.
You know, let Ben do all the talking. He loves doing that. So let's really quickly. So Amir says, watch the language. Yeah, sorry, it's a G-rated audience, so... You know, Ben's problem.
We'll try to.
Ronnie says, "What's up, guys?" And he says, "Ronnie underwrote 2 deals a day." He underwrites 2 deals a day.
That's good. That's good. And Ronnie knows. I mean, he knows the game.
It's a numbers game, unfortunately.
It really is. Well, I mean, fortunately, right? At least I like that it is a numbers game, because then for me that's more quantifiable, right? You know, it's not this. You know, thumb in the air. How many deals should I look at this month? Right? You know, you really can back into how much activity.
And Ronnie says he likes the navy blue Disrupt polo. Disappointed he didn't like my plaid shirt. You know,
he went with something new. He showed up this morning. I was like, whoa, where'd you get the new shirt from, man? I thought we were trying to, you know, match every single time. Right?
Unfortunate.
We don't really do that. People always think that we're like calling each other on a Monday morning. What are you wearing? But we don't do that.
Ask him what shoes you're wearing. Let's keep going. So,
attainable. All right. So I always the example that I give for this, right, is, you know, if you're a doctor, and I'm not picking on doctors, I have a lot of respect for doctors, right? If you're a doctor and you work 80 hours a week, I don't think actually looking at 100 deals a month is probably going to be attainable, right? Because you just physically don't have enough time to go and talk to a broker, to then go underwrite deals and do property tours. It's just not.
Similarly, if you're making, let's just pick numbers, you're making $5,000 a month, and you're like, I want to make, you know, $100,000 a month in real estate in the next year. That's probably not attainable, right? Yeah. There needs to be a pathway to get there. Maybe it can, right? There's always exceptions, but, you know, build something out where you have some, you know, you can see a pathway through the forest to get to that goal.
Yeah, absolutely. Right? And that doesn't mean that, like, hey, you can't go from that 5 to 100,000, but maybe it's going to take you 5 years, right? You know, I mean, just be realistic.
Maybe you can see the pathway from 5 to 15, and then from 15 to 50, and then 50 to 100, right? You can maybe see that, but you got to get to the next hill before you can see the next one after.
So you have to give yourself enough time and resources to complete the goal, right? You can't just, I'm just going to go in and make it 100,000 a month, or I'm going to be able, even though I have no time during the day, I'm going to look at 100 deals a month, right? Be realistic, folks, because otherwise your goal, even though you're trying to go and be ambitious and have your hairy goals up there, right? You're never going to be able to get close to them because they're never going to be attainable.
Yeah, and maybe we have one more comment from Amira, so this is relevant. I guess I'll go ahead and read it. But basically, has your definition of real estate goals changed due to COVID temporarily, or have you stuck to the same goals? Asked because has capital raise been tough during COVID, people holding back liquidity, et cetera? Right. I'd say at the beginning, people were holding back liquidity.
No. March, April, people were scared.
Everyone. Nobody knew what was going on.
No. I mean, and the markets were tanking. Oil was tanking. I mean, there was a lot of things that were happening in March and April that have since kind of died down a little bit, but there's still a lot of uncertainty in the market. And I think, for us, our goal is always to buy certain amounts of deals, right? But that obviously got
our goal is to always find as many performing deals as we can.
I mean,
we've had to shift goals because while maybe the issue is not capital and raising money, right? Our issue right now, I don't think, is equity.
No,
our issue is actually finding deals that make sense, right? It's gotten even more competitive, right? Because interest rates fell, right? Valuations have gone up even further, right? People are willing to pay a little bit more because the rate is lower.
And the other thing is, people have gotten whacked in hospitality, office, and retail. And some of those are still good in certain areas, right? But there's been a lot of capital that has divested from there and then found their way into multifamily and some of these other asset classes that have kind of weathered the storm a little bit better. And multifamily is no different, so there's a ton of competition still.
Absolutely.
So relevant, right? Is your goal relevant to, what you're trying to accomplish, right? Is it, within the goal time frame, is that even possible, right? Can you do something in, 1 month when it really realistically is probably going to take you like 12 months, right? Relevant, realistic is kind of
it's just like people giving weight loss goals, right?
Yeah.
I'm going to lose 50 pounds. Achievable if you're saying in a year, but I'm not going to lose 50 pounds next week, right?
Yeah.
So
that's not really realistic or relevant, right?
It's not attainable, nor relevant. So.
Yeah. So you just have to make sure that all your goals, kind of fall in line with that, right? And I think one of the biggest ones is time bound, right? I think that the biggest problem that we do see is we have people that come off these boot camps, come off these guru groups, right? And I'm going to buy 10 deals next month, right? Because they're all hyped up, they're all amped up. They maybe even have some money to maybe even pull something like that off, but they don't have all the pieces together. So, your goal of buying 10 deals right after a 3-day boot camp is just that's not realistic, right? So you need to have, not only does it need to be time bound, just because, so it makes it an actual goal. It can't be, I'm going to buy real estate in my lifetime, but it also has to be a realistic time bound goal as well, right? You can't flip it on its head and say, I'm going to do everything in the next 6 months and I'm going to be a millionaire, right? And I give examples. You're not going to be able to retire from this stuff in 3 to 5 years, like some people like to say, right? You have to realize that this is a marathon, not a sprint, right? You do get wealthy, but it's not a get rich quick scheme. It's not what real estate's all about, right?
Not at all.
So that's a smart goal.
Those are smart goals, right?
Right.
And so again, it's just, and again, goals can change, right? So they're not permanent, right? Just like, again, our goal changed. And I think, kind of going through the comments, right? Clayton basically says, if anything, I would have thought the opposite. Deal flow dipped during the summer of Corona, resulting in more capital available for deployment. Exactly. Deal flow dipped, rates fell, people want to shift from other asset classes to multifamily. So prices have gone up, deals are harder to come by. I mean, there's a lot of liquidity out there. I didn't even tell you this.
There's a ton of money out there.
You guys can hear this first. I had a guy today call me. I'll tell you who a little bit later. Literally said, I just finally sold the deal. I have $9 million to put into a deal. Do you guys have a deal right now?
Don't tell me that.
Literally. So there's a lot of capital out there. It's about finding the right deal.
We need a deal.
No. And on top of that, this person's doing a 1031 exchange. So we have 20 days to find something if we can, but that's a different thing.
All right. Well, God bless that gentleman. We'll maybe at some point all the stars will align.
There's a lot of liquidity out there.
Deals.
It's a lot of opportunities about finding,
And we've had a lot of those types of conversations lately. Yeah. I mean, there's a ton of people that have a lot of money and a lot of people that were trying to deploy money before the end of the year, right? Mm-hmm. Not knowing what's going to happen to bonus depreciation or just wanting to get that bonus depreciation before the end of the year. Right, and so we had a lot of people hitting us up the last 3 or 4 months. You closed anything before the end of the year, right? And unfortunately, we weren't able to get something across the finish line, but we're trying. We're trying, right? Because we're not going to get off what our underwriting model is just to buy a deal, folks. That's a big goal for us. So, all right, so we've got a little bit of an example here. and Shanna was kind enough to kind of put this together, right? You're looking to go part-time in the next 5 years, or maybe you're looking to retire. You're looking for passive income to cover your overhead, right? And there's a lot of things I always tell people when you're first getting into real estate, get your own house in order, right? What's your personal financial statement look like, right? How much liquidity and net worth do you have? How much are you spending each month, right? And then, how much are you making plus benefits? You need to understand all of these things to understand if you're ever going to be able to retire.
Yeah, right? Let's show this on the screen so people can kind of see it as well, right?
Yeah.
So, it's really sitting down and working through this, right? Yeah. And kind of defining all of this and put together a plan.
Yeah.
Then, New Year's comes along and you actually sit down and try to make steps towards your plan. And this is where having it measurable is important because you can constantly measure, are you making steps and are you making the right steps?
Yep. So, all right. So in this example, right, you outline your current resources, streams of income, right? How much do you have to invest? Outline the monthly income that would cover your family's monthly expenses, right? This is your overhead. And this example is $2,500. It's pretty light, but hey, if you invested $350K at a 9% return, right, you would receive $31,500 a year. This would allow you to look for investment opportunities that offer you cash flow at 9% plus, right? So you'd be covering your overhead, right? So now I wouldn't say you go out and quit your job immediately. In fact, I'd probably say no. But you at least are now backing into the box that you're looking for, right? If that is your ultimate goal is, I still want to work, but I want to cover out all my overhead, right? And in this example, if you found a couple deals that were cash flowing 9% plus a year, right, you'd be able to do that. Just imagine the freedom that gives you, right? When you go into work because you like to go to work, and not everybody's going to say that, right? But say in this example, you love what you do, right? Maybe you're a doctor and you love helping people, right? You could go to work and you could do that without the stress of having to bring home that income to cover your overhead, right? Because your investment's already doing that. So we always kind of tell people, really get your house in order first, understand what you need to make on a monthly basis, and then you can go out and start making these investment goals and defining what your box is because it's backed up by real world numbers, right? And I think that's important. A lot of people don't. They just kind of hop into it. Oh, I got a 50 grand or I got 100 grand and blah, 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 and I'm going to retire from my job in the next 6 months. It doesn't really work like that. A lot of this stuff, in our business, you make a lot more of your money when you go to sell. And that usually takes 3 to 5 years.
Yeah, depending on the play. We've done a lot of value add plays, right?
We have,
other
right?
Plays
but
typically,
typically it's 3 to 5 years, right? So you figure you're buying for a year or two, you're riding it out 3 to 5 years. Maybe you make a fortune at the back end, right? But that's still 5 to 7 years that you're holding on to those deals. Yep. And so, or from the start of the process until you start exiting some deals. And so you just need to take that into consideration that you might be, burning the candle at both ends. And that's the other thing too, right, is define how much time you have, right, to achieve your goal. And I think that goes back to the earlier slide, right, which is this even attainable, right? If you're working 60, 70 hours a week, which in some people, that's a real world example. You might say, hey, I got some money, but this person's got some time. So maybe I partner up with that person. This person does all the work, I'll provide the money. Now you've got the starting of a partnership. Right, and so you also need to understand that just so you can define more of your goal.
Totally agree. So for those tuning in, Money Mondays is every Monday 3:30 Central.
Yep.
Right, we're going over how to define your real estate investing goals. Right, but basically we'll do 15, 20 minutes presentation, 10 minutes Q&A. So if people have questions, comments, feel free to leave them. We're happy to walk through any of those questions. We're pretty open guys, candid guys. So
yeah, absolutely.
Really quickly, let's see.
What do we got?
Iggy says, "What's up?"
Iggy, what's going on, buddy?
Ronnie says SPAC can make you a billionaire pretty quickly, Ben. What's SPAC? SPAC.
Ronnie, what are you talking about, buddy?
I don't know either. SPAC can make you. Now I'm going to search it online. Let's see really quick. SPAC.
No, focus.
Let's see what that says.
Focus. We're
Special Purpose Acquisition Company. Come on. All right, is a blank check shell corporation designed to take companies public without going through the traditional IPO process.
Hey, you learn something new every day. Ronnie.
Commercial real estate is a long-term game, and then what's y'all's 2021 goals?
Okay.
Those are secret. We're going to do a whole show where we talk about those, right? So we'll kind of announce those in another.
Are we? I didn't really.
Yeah, you didn't know about that? We're doing this show, I think February 15th, where we talk about a 2020. We'll do another show where we kind of go through our goals.
I will tell people what our goal was this year, right? And that we did not achieve it, and I'll tell you why. We were supposed to buy 2,000 units this year. And I think we had the team, we had the resources, we had the deal flow to do it. And unfortunately, COVID hit, right? Things changed, right? So we haven't bought any deals this year. But I would say that our goal is at least that, if not more, for 2021. Because our capacity has now grown quite a bit.
Assuming, the world stays the same, we will probably go buy a lot more next year. Assuming,
I'd say 2,000 or 3,000
it's forcing us to even expand our acquisition pipeline and really make it. I think what we had is actually really good compared to most people. Now we're going to make it even better.
Yeah, we're going to make it more robust.
Really just
get more deals. Once again, folks, it's all about, you have to back into this. You have to look at a certain amount of deals to make a certain amount of offers to get a certain amount of deals under contract, right? And even then, right, sometimes they fall out for whatever reason. So, that's what we're going to try. We're beefing that up right now, getting ramped up, getting all of our goals set for 2021 across all of our business units, right? That's just disrupt equity. And we still have some other crazy goals for that too. So this is the time to be thinking about this, folks. And, I really encourage you to jot this down, write it down. It makes it more real than just saying it out loud, right? Jot it down, put it up on your whiteboard, put it in front of you in your office, right? Or most people don't go to the office these days, but put it in front of your home office. Because if you're looking at that, you wake up and you look at that every single day. And I like the saying where if you're 1% better every day, that's 365% better in the course of a year, right? And so don't look at it as, oh my gosh.
Actually, that's not the way the math works. Well, so if you're incrementally, if you're 1% more than the previous one, you end up.
You get what I mean, though, right?
Compound interest.
Okay, but you get what I mean, though, right? So I always say, look at your goal and then break it down, right? Into what do I do today? What do I do this week? What do I do this month? What do I do this quarter to get that yearly goal, folks? So don't think of it like as this daunting thing. I always tell people to shoot for the stars, and you'll actually be surprised how close you get, right?
Aim for the moon and you fall amongst the stars.
There you go. I like that.
But let's keep going. So if anyone has any more comments, questions, let us know. But really quickly, right?
Yep.
So we did, for those of you that know us, right? You guys know that we have a big conference that we put on, Multifamily Investor Network, MFIN, right? So we try to do 3 of these a year. Corona kind of messed that up last year, right? But we did do our last one last February.
Yep.
Right.
And
here in Houston, how many people do we have, Ben?
Like 450, man.
450 people, and maybe what were some of the mayor? We had the mayor of Houston came out. Who else did we have kind of come speak?
We had Rod, we had
Cleve,
Neil
Bawa, really good mix of people. And ultimately, and it's not even about the speakers, folks. That's one part of it, but it's really about the audience, right? And it's really called the Multifamily Investor Network. We're trying to build that network because real estate's a team sport.
It is.
And so we're really trying to put on a different event where it's all about networking. For us, it's a loss leader, I'd like to say, right? We don't make any money on this thing. It's really about actually getting good quality people, putting on a good quality event, right? One day action-packed event. And so, our next one is coming up February 27th, right? We decided we will do one. And
we're going to be socially distancing. We'll have masks
back
available,
here in Houston, right?
Yep.
So February 27th. So if people are interested, right, use coupon code EARLYBIRD, right, to get $100 off your ticket, right? www.mfinvestornetwork.com.
And how long we're doing this through? I think the end of this coming weekend, correct?
Yes,
maybe?
I think so. It's our Black Friday early bird sale. So
So I mean, check it out, folks. We always have good speakers, but like Ferris said, the more important thing is the networking, right? The relationships that you're building. This really is a relationship business. It's a numbers business, but it's a relationship.
And come out and hang out with me and Ben. Come on, people, right? Maybe we'll do something at the office for kind of people that know us as well. Maybe Thursday, Friday.
I think we should.
Yeah,
I think we should. We're probably gonna be shooting some video here too, right? So. We love to see our folks. We haven't seen a whole lot of people other than mainly our Texas peeps and some of that.
I'm tired of seeing Ben, guys. I want to see someone else. Come on, people.
No, but we'll do it safe, and we're excited about having it. Once again, we're trying to get a good lineup of speakers, so you'll learn some stuff. You'll meet some great people. And the one thing that we always kind of point out too, we're not there to sell you anything. We're not there to try to upsell you.
No sales pitch.
So it's a no sales pitch event, and anybody that's been there can back that up.
I would sell Ben if I could, but. I don't know if I can find a buyer. So www.mfinvestornetwork.com.
Sell me for the suit I'm wearing.
I'll keep the polo. It's a nice polo.
No, it's the only time, folks, you're going to catch me and Ferris in a suit. So you got to come out, at least check that out, right? We'll be dressed up that day. But any questions, man? I was surprised we didn't get any questions.
We got one more from Tyler. Tyler. I remember our emails. He's got 985 units for you to hit that 2,000 unit goal.
I
know you took a look already. Tyler, you got to get that price down significantly. I think, it's funny, I was talking to someone else about that same deal.
Where's that?
It's actually not far from our office. It's probably what?
Oh, it's a Houston deal?
It's probably 10 minutes from our office.
The problem is, and no offense, Tyler, right? I haven't looked at the numbers, so just take this with a grain of salt, right? I'm sure this is a great deal for somebody. But for us, we always look at who could we potentially sell that to, right? And it always is challenging to sell something that big, right? Because there's only so many people that can bite off that big of a deal. Right, but we'll still look at it. The numbers work.
I'm guessing your 985 unit numbers across, 2 deals. I thought one of them wasn't 985. But yeah, Tyler, my feedback to you is that deal was too expensive. But if you have any other deal that you think is attractive and you need someone to move quick, let us know. We'll get you an answer within a day.
Yeah, no.
So if it's something, but you got to step up and let us know. It's got to be a deal.
Yeah. No, on something nice, right, in a nice area, we're willing to look at it, right? I think we're trying to be more, not only conservative in the way that we're underwriting deals, but also just more conservative in the type of asset that we're buying, right? I think we're trying to look for something a little bit newer, a little bit nicer. We'll still do the Class C 70s deal, right? But we really would like it to be 80s, 90s, and above, because really cap rates, they've compressed. There's just not a lot of delta between a B and a C and an A these days. And I'd much rather step up, pay a few, more basis points, on a cap rate, then go for a Class C that's just going to give me a bunch of headache. But
but we'll buy A, Bs, and Cs. Just got to be risk adjusted.
It's got to be the right deal.
Return.
It's got to be the right deal, right? All right. So what else we got, man?
All right. Anyone else have any more comments? Let us know. Otherwise, we're going to call it a wrap. So Money Mondays, do this every Monday, 3:30 Central. Tyler, I'm going to wait on you to send me a good deal to kind of go pursue, and we're happy to get a deal closed with you sometime soon.
Yeah, let's do it.
But if anyone else has any more comments, questions, go ahead and leave them. Otherwise, we'll see you guys next Monday, 3:30. Yeah, not a holiday. So we'll be on in 7 days. So
yeah, happy Thanksgiving, everybody. Be safe.
And what are we talking about next week?
How do real estate syndicators make money? Whoa.
Supposed to make money in this business?
Do we make money in here?
Yeah, so we're going to talk about how real estate syndicators make money, right? What do deal structures look like? What
are the
things kind of go
fees?
for? And maybe what are, for those of you that are passive investors, right, what are norms, right? In terms of, what is common for certain things and what is not common.
Yep. And there's some people that think that everything's common,
Yeah.
We'll show you those types of deals. But yeah, no, that should be exciting, because I don't think a lot of people understand how it works and how we structure it. So that's going to be a good one. Everybody should tune into that one. But cool. Well, I think that's it, man.
All right, let's call it a wrap then. Thank you all very much. We'll see you guys next Monday.